Hello, learners. Welcome to our session today once again. It is a continuation of what we were doing earlier on. Recall we had introduced the concept of professional firms. We also went ahead and looked at the journal entries that we're supposed to maintain. So in our class today, I want us to handle a full question. Recall also I had mentioned that this concept ideally is not that very common, and there's no recent question that has been tested, but we've established it from various courses, and there's a very good question that if we manage to handle it very clearly, you'll find that no question for professional firms might be an issue on our end. So the question that we're going to handle, the same question, you can as well download it from, of course, if you're using your phone or a web app, you can download that question. I'm going to share it on the screen. We go through it together. Then at the end of the day, it will be very easy now for us to be able to handle any question on the same. So this is a question that we are having here. I'm sharing this question with us so that you can go through it together. So this is our question. This is our question. We are told that in this question of ours that Juma and Company Advocates is a law firm operating in an upcountry town. Provided below is a balance sheet of the firm as at 30th June 2021. In that case, I'm told that we do have, of course, our assets, non-current assets, current assets, non-current liabilities, as well as the current liabilities. Talk of the following transactions were carried out by Juma and Company Advocates in the year ended 30th June 2020. I'm given 2022. So these were the transactions that took place during that year. So having that, you're told that the first transaction that you're given here is received 850 on behalf of their clients. So anytime you're talking of to record cash received on behalf of the clients, recall, we said we debit our cash book, clients column, and we credit our clients account, clients column. Very key to understand. Note 2, we are told that I spent the amounts shown below on behalf of the clients who had sufficient cash held by the firm. It means that they had what? They had sufficient amount. So to record payments of expenses on behalf of clients with sufficient funds, we debit our clients account, clients column, and we credit our cash book, account, clients column. Very key to understand. But if at all we had insufficient, that meant that we should have debited our clients account, office column, and we credit our cash book account, office column, because we'll be paying on their behalf. So that was with sufficient. Number 3, purchase new equipment for office use for 400,000 and paid 100,000 cash. The balance remaining as a loan. So it means clearly here that we purchased here as an item, but this item, in that case, I had it as 400. We didn't have enough cash. So we paid 100, the balance was to be paid via what? It was to remain as loan. So therefore, in this case, whatever that we need to do is to debit our office equipment. We credit our loan account as well as our cash account. Very vital to note that. Note 4, spent 350 on the purchase of land on behalf of our client who had a credit balance of 120 with the firm. So therefore, in this case, we purchased a land. This person had 120, yes, with us, but the remaining, of course, it meant that we had to pay for the same. So we'll see how we'll treat that statement. Come to note 5 here, we are told that in note 5, charged clients 1,050,000 for services rendered in the year ended 30 June 2022. We are talking of charging, and recall we say that to record fees charged for professional services rendered, number 1, we are supposed to debit our client's account office column and to credit our fees account. Also, we'll be required to close this account. So to close the fees account, basically, we debit the fees account and we credit our P&L account. Very So in this case, we had received 680 from clients' settlement of amounts due for services rendered from the, of course, from the client, right? So recall we mentioned that to record professional and disbursement received from the client, we need to debit our cash book, office column, and we credit our client's office column. This is the amount that you are receiving, okay? The firm received authority from clients to transfer to 40 from the client's account to the office account in the settlement of the amounts due to the firm. So again here, we're also noting that there's that authority to transfer, where we mentioned to record transfers of funds from the client's account on office account on authority from the client. We are supposed to, if it is at all transfer in the cash book, we debit our cash book, office column, and we credit our cash book, client's column. Very important to note. Part B, to record the contra in the client's account, we debit our client's account and client's column, then client's account, office column. That is at all if you're talking of what? Contra. Very important to note. Then note number 7, the following expenses were incurred by the firm in the year ended 30 June 2022. All were settled in cash. This is amount, or rather these are expenses incurred by the client, or rather by the firm. Therefore, in this case, you know very well that you'll be debiting our respective expense account, and we credit our, of course, our cash account, where the cash is coming from. Notate, during the year ended 30 June 2022, the firm received 480 from the client as a settlement of disbursement made on their behalf by the firm. Purchase library books, of course, the assets. Debit library books, we credit where the cash is coming from. Purchase stationery on credit for 210 and paid the creditors a total of 240 in the year ended 30 June 2022. So basically, in that case, we purchased on credit. So therefore, we'll have to consider that. Then we are told that these are drawings. On 30 June, stationery, the store valued at that. On the same date, work in progress not yet charged to clients was valued at that. The firm provides depreciation at the following rates based on the book's value. Equipment 5%, furniture 10%, library books 12.5%. So required here, we are required to prepare our P&L account, which is income and expenses account, as well as a statement of financial position as of 30 June 2022. So that's the detail that I'm given, my good students. That's the detail that I'm given. So given such, where are we going to start from? Where are we going to start from? That would be very easy, because for income statement, for us even to have an income statement, and knowing that I'll also be required to prepare our statement of financial position. At this point, key element that I want us first of all to learn is how to prepare our cash book account and client's account. That will be very vital. That will be very vital. So therefore, noting that, in this case, I'll want us to use our Excel. So this is what you're going to do to work it out quickly. So this is what we'll be having. This is what we'll be having here. Okay, so this is what we should be having. I need to prepare our cash book account. So therefore, my cash book account, I should be having it here. Let me increase my font so that you should be able to view it clearly. So you're having cash book account, okay? Cash book account. I should be having it at that point. On this, we'll be talking, of course, of the following. That is our details here. We can have our details from here. Details. So I'm having our details. We have, of course, our office account. I'm having our office column. We're having a clients column here. Clients column. Again, of course, our details here. Then the same case, I just copy paste this one here. Our figures you are given in thousands, so you should not forget that. Figures you are given here in thousands. Very important to note that. Okay. So at the same time, I can also prepare, of course, our clients, or rather our client's account. Yeah, I can prepare our client's account as well. So I'll just take this. Then I'll paste it somewhere here. But this time round, you're talking of client's account. Client's account. Okay. So these are what you should be having. So always we start with, of course, our balances brought down. And balances brought down, in this case, we are starting with our cash book. Where are we going to get these balances? We just check our statement of financial position, cash at bank. So I'm having my balance brought down here. We're having balance brought down. So for balance brought down, I'm given a figure of how much. I'm having a figure of, for office, we're having 300. Whereas for client, I'm having 250. Very important to note. Very, very important to note. After that, we consider the other item. The other item that we'll be having, my good student, is what? Our client's account. The question will be, where are we going to get a balancing figure in our client's account? That will be simple, because this is what you're supposed to do. Go to your statement of financial position under liabilities and check the client's balance. So in this case, I'm having the clients for money held on their behalf. I'm having 250. So therefore, the same case, that is a liability. So opening balance is on the credit side, where I should be having my opening balance at that point. Once we have that, I'm given the client's account, which is how much? 200 on behalf of the client. So 250. Okay, 250. Once you're done with that transaction, we proceed to the next transaction. The next transaction, in this case, we had what? After opening balances, come to our additional information. Note 1, received 850 on behalf of the client. Anytime I am receiving an amount on behalf of the client, if you can recall our double entry, what are we supposed to do? We debit our cash book, client's column, and we credit our client's account, client's column. So therefore, in this case, I'll come to my cash book. I'm having client's account, client's column, 850. We come to our client's account. This is cash book. Talk of our cash book. Client's column, 850. Okay. We proceed to note number. We proceed to, so I can bring this one here. We proceed to note 2. Note 2, what are we told? In note 2, these are what you're told, that spent the amounts shown below on behalf of the clients who had sufficient cash held by the firm. So recall to record payments of expenses on behalf of clients with sufficient funds. We debit our client's account, client's column, and we credit our cash book account, client's column. So therefore, I'll come to our client's account here. In this case, we are going to have, of course, our cash book. So in this case, I'm having, of course, we purchased the following item. That is number 1, equipment, a figure of how much? Equipment, I'm seeing a figure of 260. Rent, paid, a figure of how much for rent. I can clearly see my rent. I'm given a figure of 130. We're having repair cost. Repair cost, we're having a figure of how much? Repair cost, we're having a figure of cost of 80. Then the same procedure, we go to aspect of course, my cash book. So cash book, we're having our details here and the amounts there. Okay. So we have recorded that part. We proceed to the next note here, note number 3. Note number 3, these are what you're told that purchase new equipment for office use for 400 and paid 100 cash, the balance as a loan. So these are what you should have in mind, that first of all, we are talking of what? Purchase of what? Purchase of an equipment, right? So, of course, in this case, I'll be having our cash book and aspect of loan as well as equipment account. So we've said number 1, we debit equipment with the whole amount of 400. We credit, actually you can open our equipment account here. So I'm having an equipment account here. You can have our equipment account here. Equipment account. So not a must, but important to open because it will assist us. So we do have what? We do have a balance breakdown for equipment. Balance breakdown, you're given a figure of how much. We just check it out here. 800. We purchased new equipment. So we purchased an equipment of how much? This is a loan and bank, loan and cash. A figure of how much we used. Note number 3, 400,000. So I'm having 400,000. Where in this case, on this case, actually, I can have it as separate. Yeah, the total is, of course, from loan and bank, a total of 400,000. So cash, we are told that we paid how much? 100,000. So what I'm going to do here, we're going to have, of course, our cash book. That amount that you are paying, that is equipment. That is of course equipment. 100,000. Equipment here. Cash, that is our cash book. Cash book I'm having here. Equipment. Because this is office. Office column. Office column, 100,000, because it was relating to our office. Okay. Now, after that case, we proceed to each note. Note number 4. Spend 350 on the purchase of land on behalf of client who had a credit balance of 120 with the firm. So I'm purchasing a land which had a total cost of 350. Right? Total cost of 350. Total cost of 350. So therefore, in this case, this person had only 120 in his account, right? So if at all he had 120 in his account, that is to say, my good students, that at this point, I'm going to have what? We're going to talk of course, our land. By doing that with sufficient amount, we are going to debit our aspect of our client's account, client's column, and we credit our cash book on the client's column. So these are what I'm having. We purchase land. But for land, this person had only 120. So therefore, I'm going to credit 120. We're going to credit our cash book client's column 120. And the same case, we debit our client's account, client's column with 120. But what is the difference for us to purchase the land? So therefore, the difference, we are going to treat it as if this person had insufficient amount. With insufficient amount, and we are purchasing on the behalf of the client, we are going to debit our client's account of his column, and we credit our cash book account of his column. That is what we mentioned. So therefore, land with the difference should be how much? The difference of the cost of land. The cost of land was 350 minus 120, which should give us 230. So I'm going to debit our client account, office column, and credit our cash book account, office column with 230. Therefore, I'm going to have here 230 as well. Okay. Once we have that, we proceed to the next note. What's the next note telling us? The next note here, you're told that you charge clients a figure of how much? 1050, 1,050,000. That's what you charge our clients for services rendered in the year ended 30th June 2022. So charging our clients with a figure of 1,050,000 for services rendered, what are we going to do? These are what we can do. Remember, with the amount that we charge, the amount charged, we are going to debit, of course, our client's account. We are going to debit our client's account. We are going to debit our client's. Of course, you are saying that we are going to debit our client's account office column, and we credit our fees or cost account. So that is exactly what you're going to do. Remember, all this you are kind of looking at the journal entries that we had prepared earlier on. So the amount we debit our client's account office column, and we credit, of course, our fees account. So therefore, these are what Mwalimu is going to do. We come to our client's account, where in this case, I'll be having the fees that was charged, not paid, fees that was charged, office column, 1050. Right? Then you credit our fees account, then you credit our fees account, then you credit our fees account, we credit our fees account. Then we mentioned that clearly we will have to transfer that fees, closing the fees account. By closing the fees account, we'll debit that fees account, and we debit our fees account, and we credit our P&L account, which will be doing that as we'll be preparing our P&L. After that, we proceed to the next item. The firm received stationery from clients, authority from clients to transfer to 40. Sorry, before that, I'm having received 680 from clients, settlement of amounts due for services rendered, So we are talking of receipt from client. So receipt from client, of course, we are going to debit our cash book account, office column, and we credit our client's account, office column. So that is what you're going to do. A figure of how much? 680. we debit our cash book account. That's the figure that we are receiving. So receipt from client. Receipt from client. Debit 680. Whatever that you're receiving. Then we come here, we are having cash book. $680. Okay. Once we have that, we proceed to the next item. The same note, you're told that the firm received authority from clients to transfer to 40 from the client's account to the office account in the settlement of the amounts due in the firm. Recall, with that amount of authority given, where we mentioned to record transfers of funds from client's account to office account on authority from the client. To record that transfer in cash book, we debit our cash book account, office column, and we credit our cash book account, client's column. So that is exactly what we are going to do with the funds transfer. With the funds transfer, we debit our cash book account. We debit our cash book account. Of course, with office, that is to 40. And we credit our cash book account, client's column, with an amount of the same amount, which was 240. So basically, that is what you're going to do right now. So we are on the cash book. Authority has been given to transfer that amount, right? So see, I'm having funds transfer. We are transferring from client to office. So we debit our office 240. We credit cash book account, but client's column with contra. This is just contra, or rather funds transfer. Funds transfer. These are basically contra entry. On client's account, I'm having a figure of 240. I'm having a figure of 240. A figure of 240. Okay. The next entry, what were we having? The following expenses were incurred by the firm in the year ended 30 June 2022. So basically, these are expenses incurred by the firm, and therefore we debit the respective expense account and we credit our cash book account. Where in that case, I'm having, I'll just take the figures here directly. So I'm having rent, a figure of 120. Salaries, wages, salaries and wages. $360. Office expenses. $90. Interest on loan. $30. Loan repayment. $300. So basically, that is what we have, right? In addition to that, we proceed. So we can proceed here. Okay. We proceed to the next data, the next note 8. During the year ended 30th June, ended 30 June 2022, the firm received $480 from the clients as settlement of disbursement made on their behalf by the firm. So there is this aspect of disbursement. So client's account. So in this case, we're going to consider, of course, our cash book. We debit our cash book office account and we credit our client's account. That is, of course, office column. So therefore, we should be talking of course, these are basically client's account. Disbursement. We debit our office account for 80. Then come to our client's account here. Where we are talking of our client's account at this point. We are having disbursement of how much? 480. So cash book. $480. Very important to note. Then the other key element here, we are talking of course, number 9, purchase library books worth 160 and pay them in cash. So we're having library books 160. So we debit that books. We debit the library books account and we credit our cash book account, office column. That is, of course, a figure for much? 160. Purchase stationery on credit, so stationery will increase. And pay the creditors a total of 240. So we're having creditors. We paid creditors, so that will affect our cash book account. Drawings for personal use in the year ended 30, for the end of June amounted to 180. Basically, drawings, because we didn't have goods, in this case, you assume it was cash. So drawings, a figure of how much? 180. Then we talk of course, of on 30 June, stationery, the store valued on 60 on the same date, work in progress, not yet charged to clients amounted to that. So that will not affect our cash book. So therefore, that is to say, on the cash book, I think we are done. So we can close our cash book and see the balances that we'll be having to determine where we'll be having balance go down. So that is 1700 I'm getting there. So for client account here, I'm having my balance carried down. Balance carried down. You can clearly see I'll be having a figure for much. The credit side is more than the debit side, and this difference should give us how much? 1810 minus that, give us 110. So therefore, my balance, I should be having balance go down there of 110, balance carried down, whereas on the debit side, we should be talking of course, that is 1100 minus 830 to give us 270. we have closed that account of ours. We have closed our cash book account. We have closed our cash book account. Basically, that is what you're supposed to do on that. Then on the client's account, we can also consider our workings and see what we'll be having. We didn't have balance put down here. Let us check. Balance put down, you must be having a balance put down somewhere. Client's account. Rarely we'll miss a balance put down. And where will a balance put down come from? Always check in your current asset. Check in your current asset. That one slipped us, sorry. Balance carried down, balance put down many a times we'll always be having it. Rarely we'll miss that. So talk of our current assets, look at the debtors for fee and disbursements, right? So this is what the client was owing the firm as at the end of that period. So balance brought down. That is on office. This was the debt. The data was 330. So I'm having here 330,000. 330,000. Rarely we'll miss that figure. Rarely we'll miss that figure. Rarely we will always be having that figure many a times actually. So once we have that in place, we can now close our accounts here and see what we'll be having. Balance carried down. So on this case, I'm seeing that credit is more than debit. So I'm having here 510. Whereas on the other end, we should be talking of how much? On the other end, we should be having, so first of all, yeah, this is 510, correct? On this other end, we should be talking of course, 1610 minus that, give us 450. $150. So basically, that is what you should be having. That is what you should be having. That is what you should be having. Remember, at times, also in this case, this other entry, you can as well, remember the contra here. The contra, as well as we can treat it still under the client's account. Exactly the same that it was, but it will be the opposite. Like this is what I want to show you. Client's account, we have the contra opposite with each other, 240 there. Talk of aspect of funds transfer. To 40. Contra, basically it's just contra. Basically just contra. So that as at the end of the day, what should we be having here? As at the end of the day, what should we be having here, my good students? Basically, it's like we are talking of, let me remove this completely, see what we'll have. So basically, we're talking of 270 and 210, respectively. So if a student treats it also like that, still will be having the same answer by the fact that we had said that with the contra, to record the contra, that is that record transfer in cash book, we debit our cash book and credit our cash book. That is office and clients column. Then to record the contra in the client's account, we debit our client's account, client's column, and we credit our client's account, office column. And that is exactly what we've done here. Actually, we had skipped that. Remember our journal entries, that was the last journal. Look at the last journal. Look at the last journal where we mentioned that to record transfers of funds from the client's account to office account on authority from the client, we record the transfer in cash book, then we record the contra in the client's account. That is very vital to note. That is very, very vital to note. So that's it to the first bit. The other bit, it will be upon us to prepare our income statement. So let us meet in the next session and prepare our income statement. Thank you.